Welcome to the Leaders of B2B podcast, a weekly show where we bring you interviews and in-the-weeds expertise with today's B2B experts and thought leaders. You can see more about today's episode and guest by visiting our website at leadersofb2b.com. This episode is brought to you by Content Allies. We help B2B companies launch revenue-generating podcasts. We schedule interviews between you and your ideal prospects and strategic partners. You show up for engaging conversations, we handle everything else. Ready to build a podcast that grows your business in just 1 hour per week? Reach out to us at contentallies.com.
Hey everyone, welcome back to another episode of Leaders of B2B. Today, very excited to be talking with Mark Gartner, Managing Director at RLH Equity Partners. And Mark, thanks for hopping on here. And what are you going to share with the audience here today?
Yeah, thanks for having me, Jake. Today, we're going to talk about if you're a founder and you've agreed to have an introductory call with a private equity fund, what are the 5 questions you should ask them to qualify them and determine if they're a fit for your business?
Awesome. Love it. Excited to have this conversation. I know private equity is a mysterious world for a lot of business owners. So I think that's going to be super insightful here and everything. And so I guess, Mark, for context here, could you tell everyone a bit more about yourself, what you do, and what RLH Equity Partners, where your focus is?
Yeah. So I'm a managing director with RLH. The firm has been around for 42 years. And for much of that time, we've been focused on high growth services-based companies. And it was really a couple of decades ago that we decided to focus exclusively on the professional services category, which was somewhat of a revolutionary decision at the time because a lot of investors, were somewhat fearful of the category. These are businesses that are really people-based. You have to focus on things that a lot of private equity funds probably have a bad reputation for doing, like culture, like partnering with founders, like supporting the growth of these businesses, not cutting costs. Not using a lot of debt in those transactions, which can oftentimes unduly stress an organization and also put in risk to the culture piece again. And so we really developed a playbook and a strategy that supports the organic growth of these companies and helps them get from, maybe 20, 30, 40 million in revenue to 100 million and beyond.
Yeah, I love that. And that's, again, it's an interesting angle and not something you see a lot of private equity focusing on this industry. And I'm curious, for you all, what have you seen? What are the factors? I want to dive into these 5 questions, but I'm also curious, what are the factors that lead to a successful professional services company? Like, what are some of the trends you've seen across your portfolio or all the companies that you're talking to? Like, what really leads to someone who's got a good growing firm?
There tends to be some macro trend that is supporting the growth of these businesses. For us, we've been really successful with companies that are benefiting from technology change or technology complexity. That tends to produce a lot of consulting revenue opportunity. And it's common that we'll see organic growth in the companies in which we invest at 15 to 20% or more. And so it starts with that mega trend that is, rising the tide for all boats, so to speak. And so that's what we look for to begin with. The second is a founder who really understands people-based businesses who've created an inspiring culture in which people work. You got to find these organizations where you and I would want to work there and make a long-term career. And that tends to be a wonderful starting place as well. They also ultimately become really the employer of choice within their industry. They develop a reputation that is sort of magnetic for scarce talent. And if you have the best people, performing the types of services that your companies provide, you're going to be able to attract the best clients, deliver excellent service, and then the financial performance will ensue from. And so those are a couple of things that you really want to make sure are very solid as a starting point.
I love that. And that's super interesting. As a professional service entrepreneur myself, I love that. And I think the big thing I heard you say at the beginning is the macro trends. And what I imagine kind of in a way, what you're saying is choosing the right problem or choosing the right niche to be in that is going to grow. It's almost like choosing the right industry that is going to succeed. And then beyond that, it's about being a great company to work for and instilling the people. Is that kind of an accurate kind of summary of what you're saying there?
I think it's a good way of putting it. I think Warren Buffett said about investing some time ago, he said, it's simple, but it's not easy. And so if you start with that simple concept of picking the right industry, that's really good footing, for an investment. Someone told me many years ago, a mentor of mine said, if you get the industry right and you get the founder right that you're partnering with, you've got a really good shot at the investment working out. And so you always want to make sure that those two things are solid.
Yeah, I love that. Super interesting here. And so, let's talk about the conversation with private equity firms. So you're running a professional services company here. Someone's running a firm, and I'm a business owner. You get these all the time. Someone wants to invest. Someone wants to get involved in your company. And candidly, some of this stuff outreach is just so bad and so irrelevant. And so like so I think there's a lot of apprehension, I think, for a lot of people. So if someone is at that point where they're interested, they want to explore talking with private equity, or they want to look having an investment or something there, like, yeah, how do you recommend approaching that? What are some of these questions you should have, and how you handle that initial call and vetting those?
Yeah, it's a good question. And I'll start with the premise that if you built a business that has achieved, let's say, even 10 million of revenue or more, you're sitting on top of something of immense value. And that's going to attract a lot of attention, to your point, Jacob, greater or lesser quality in terms of the outreach. And so what you really want to see as a starting point is someone who sent you a thoughtful message. Is this someone who has done an appropriate level of research, even just preliminary research, to customize their outreach to lead you to believe this is not just some spray and pray type approach. And so let's assume that they've engaged with you in an intelligent and thoughtful way. And you're thinking, hey, maybe I should interact with these folks. I think it's important to know that it's not that risky to talk with investors. I think for many years, people were like, oh my gosh, this is some barbarian thinking, or maybe I'll say something that I'll later regret, or you don't have to tell anybody anything you don't want to. You're running a private business. So my advice is you should get to know a couple of investors, not that even those folks will end up investing in your business, but to get to know how they think and listen to the questions they're asking. And that can maybe even inform strategy. So there's always things you can get out of those conversations. So that's my starting premise here. And then you'd ask the question, like, how do you then take the next step, maybe to get to that initial call? Well, that's entirely up to you for who to engage with. But know that if you do agree to take one of those calls, you're only really signing up for a 30 or 45-minute conversation, which goes by in the blink of an eye. And so, again, not a lot of risk in doing it, and it's not a huge time commitment.
Yeah, no, I love that. And that makes tons of sense there. And I think there's so much spray and pray stuff out there that I think a lot of people, that's just a good rule of thumb, is like, is this some blanketed thing, or did they actually care? Are they actually paying attention and looking into my business?
Well, let's talk about some indicators that it is a spray and pray. If you see an unsubscribe button at the bottom of the email, I would basically advise you to ignore the email, because then it's part of some spray and pray campaign. If they don't use your name, if they don't use your company's name, ignore it. If they use some long form legalistic version of your company's name where it's like, comma LLC, they're probably getting it from a database. So you're going to want to find something that looks reasonably familiar. And you can just tell when text has been cut and pasted into an email. So use just the natural human, detectors, when you're being sold something in a sort of unpersonalized way, and you don't have to talk to those folks.
Yeah, I love that. And so if we get them on the call here, you've got these questions that we were talking through and you promised at the beginning. So yeah, I mean, how do you even evaluate a good investor? How do you evaluate a good private equity firm? Like, what are some of these questions you should ask to know, is this even worth a second call from there?
Yeah, I mean, let's just jump into the questions, and we can use these questions as ways for you to qualify them as a potential investor in your business. So the first question is, this may seem very rudimentary, but ask if they have capital under their control. There's a lot of people out there masquerading as investors. Maybe not even investors, maybe they want to help sell your business. So just ask them, like, do you have capital? And that may seem like an overly forward question, but it's not going to offend anybody. So don't be afraid to ask it. If you want to get to like a 1A or a 1B question, you can say, when was your most recent fund raised, and how much capital is remaining in that fund? Because that can help you figure out, do they have enough left to actually transact with you? Or are they building a pipeline for the inevitable next fund they're going to raise? And so just asking about that question is really important. And if you don't get a full-throated yes, which is pretty easy to say yes to that question, I would proceed with caution.
And then to try to understand if I'm accurate, I think what a lot of people out there do is they go try to find opportunities, and they may have some network of investors they can lean on, but then they have to they sell you, and then they have to go sell the investors. And it's like they're trying to make a deal happen, but they don't actually have the money. They're just trying to be a middleman of it, in a sense, is kind of I think what you're saying to try to avoid is those people who don't actually have the capital. Is that right?
Yeah, I mean, the technical term for what you just described would be like an independent sponsor or perhaps a search fund, where they are the face of the search for something to invest in, but they're not the check writers, so to speak. They have to then go and convince somebody else. And so there's perfectly great search funds out there, and there's perfectly great independent sponsors out there. And I know many of these folks, they're wonderful people. It just does introduce another procedural step that they have to go and sell another group of investors in order to get something done.
Yeah, that makes a lot of sense there. And just realizing, I think at the end of the day, even if they are all excited about you, it's like they have to get someone else excited. So it's like, it's kind of like almost like being in a sale, but not talking to the end decision maker. It's like you've got another step after them that you still have to work forward. So yeah.
Yep, for sure. So question 2 would be, how many professional services transactions has your firm completed? Because there are people that are dabbling in professional services, and there are people, that have routinely, consistently invested in companies of the variety that our firm focuses on. And maybe you're the founder of a business that's not even in pro serve. Maybe you're doing something else. Try to figure out, are they specialists or are they generalists? And you'll know by the questions they're asking you whether or not they innately understand the KPIs of, say, a professional services business, or if they're just, trying to figure out if this might be an interesting deal for them. And so having them talk about specific case studies is really good. If they've done one deal, okay, good. If they've done like dozens, like even better. And just really dive into some of those case studies and understand how they've helped add value to the companies in which they've invested.
Yeah. One of the questions I'm curious, because I know you kind of briefly hit on this at the start, but again, professional services is a lot of things where you got so many of these investors where they just want software companies, or they just want some sort of physical business where they kind of like a lot of, private equity firms, they have their thesis, their thing they're focused on. What are some of the pitfalls, I guess, of going with a company that may not have professional services experience? Like what have you seen there?
Well, I think the ramp up time for them to really understand what are the value drivers of a pro serve business is going to be much longer. You're going to have to answer, somewhat fundamental questions that you wouldn't otherwise have to do, with the specialist investor. And I think what you really want is someone who has a playbook for maximizing the value of a professional services business. And you can't develop a playbook like that unless you've done it a number of different times. And what you're really trying to do with your company is you have ambitions to scale beyond your current size. It's not just get bigger, it's architect the composition of your revenue and other attributes of the business that make it literally irresistible to whoever that next investor is going to be. And if you're working with a specialist investor, they're going to know exactly how to do that. They're going to know right away what levers need to be pulled so that in 5 years, the press release we're all reading about and high-fiving about, comes to pass.
Yes. Love that. Yeah. So, what would the next question be on that then?
The next question is, why did you reach out to me? Again, you don't want to just be some other name on a list that's like bulk imported, into whatever their email automation platform is. You want to be someone that they said, I went to your website, I read the bios of your people, I looked at the composition of your team, where they're located on LinkedIn, I looked at your service offering, I read about your thought leadership, your white papers. I mean, there's a lot of research you can do even with a private company, and you want to know that they put in the work such that it's worth your time. Otherwise, you may just be, another name on a list.
Oh, I love that. That makes a ton of sense, and just goes to another vetting of that mass outreach approach there. And yeah, so what would the next one be there?
The next one would be, how do you add value beyond capital? Now, if you rewind the tape and go back to the early years of private equity, there are relatively few, pockets of capital like a private equity fund has. And so the game was, okay, I'm an investor. You, business owner, convinced me why I should invest in your company. Well, now that the private equity asset class is really evolved, professionalized, the game is, okay, I'm a business owner. I have immense value here. Why should I take your capital? Why should I partner with you for the next 5 or 6 years? And so understanding very clearly how you are going to help me and why I would be better off with you than without you is critical at this stage.
Yeah, and I'm curious, for RLH and what you all are doing there with like the focus on, pro serve companies, what does that actually look like? How all does RLH add value to professional services companies that you all invest in?
Yeah, I mean, in our case, we do have a playbook, and it's something that we proudly display on our website. It looks like a pyramid of sorts, and there are these layers of the pyramid that predictably pro-serve companies need help in. You start with, say, the technology of the structure of the business and making sure the systems can produce reliable, accurate, and easily retrievable data on which you can make strategic decisions. Then you get to the talent side. Has the talent side of the equation been optimized? Do you have a chief people officer? Do you have people thinking about each of your people as individuals and helping them nurture their career and fulfill their ambitions over time? Then you get into sales and marketing expertise. And then you talk about things like revenue composition. And then you establish market leadership within your given niche. And you do all of these things. And there's a lot, of course, complexity within these layers of the pyramid. As I mentioned before, your business will be irresistible to either a strategic buyer or increasingly a larger class of private equity funds that are taking interest in professional services.
No, I love that. And again, I want to just, I'm looking at your pyramid now here. And again, it is something, it is built and everything for professional services. And I think that's something so many times you see when you look at these, or someone who's more in tech or someone in other types of businesses. It's just like they have a very different approach. And while there might be some parallels, I do think, professional service companies, you're operating on humans delivering work, and typically like intellectual work and, white collar labor and stuff like that. And so it's a different model. And I think I love the fact that you guys have an approach and framework for how you've done that. Yeah. Yeah. So what would the next question be on there then as well?
All right. So my last question in my list of 5 here, and I do have a bonus question if we have time for it beyond that, but is what's your philosophy around culture? And I think for funds that don't understand culture, this question will make them squirm in their seats. Because private equity funds, many, don't really think about this as a key value driver of a business. And in our case, you have to. If you're going to invest in people-based businesses, I mean, this might even be the most important thing of the companies we invest in. And so people have to have a very well-defined philosophy and approach on culture and in culture preservation in the context of a transaction. Transactions invite change. And so as an investor in professional services companies, you want to make sure that you are not disrupting, do no harm, is probably rule number one. And you're nurturing the culture that founder created to make the business so appealing to invest in the first place. Because that really is the end of a professional services organization. When the culture is impacted, things change and people leave.
Yeah, no, I love that. And that makes a huge sense there, because I mean, as you said, it's all about the culture in a companies like this. And it's, for retaining talent. I mean, that's the end of the day. It's like culture is the key, is really to retain talent and create that energy and drive to get people to do their best work. And, if you have a people organization with a bad culture that churns talent, you're in for a rough ride there. So that makes a ton of sense there. And I'm curious, what do you see culturally as you go through a transaction? So you guys come in, you invest in a company. How does RLH, how do you bring this new element of new capital, new involvement into an organization, yet help them retain that culture that they do have, or try to not disrupt that too much? I know you mentioned do no harm, but what other kind of ways do you think about that as you kind of get involved with the company?
Well, there's a couple of things that we do to protect culture and make sure it's going to be a good fit before the transaction even closes. We have a very proactive sourcing engine to identify business owners early in their trajectory. And so when a company achieves, let's say, 15 million of revenue, that's when they hit our radar. We're reaching out, we're trying to establish a conversation. We tell them in that initial call, we are not seeking to transact with you today. It's too stressful meeting someone for the first time and contemplating a transaction. We want to get to know you. We want to have a series of interactions leading up to a deal. And that way, both sides can make sure, is the person doing what they say they're going to do? When a business owner says, oh, we're going to do 25 million of revenue this year, and then you talk to them 6 months later, hey, how did the year end up last year? Did they do it? And the most encouraging thing for us is we talk to founders who repeatedly exceed everything, or they do everything they said they're going to do. And so that is a really important starting point. So we want to have numerous interactions with business owners before we close. Then we get to the deal discussions. So let's say we're engaging in a negotiation. Before we even close the transaction, we together develop a 90 or a 120-day plan. This is what's going to happen right out of the gate. And that way there are no surprises and there is no risk of philosophical misalignment after the transaction closes. Because that would be terrible. You get a deal done, and you realize that you don't have alignment in the vision of the business. It's crazy. And so we do that ahead of time. and that way it diminishes the risk. Beyond that, in every deal that we do, we partner with the founder, and we look for founders who are enthusiastic and excited to retain, upwards of 40% of the equity alongside us and continue to run the business. And that way you have leadership and cultural continuity in the context of a transaction. That's part of the secret sauce of doing professional services.
Nice. I love that. And I love that kind of intentionality that you all put behind that and those conversations on the front end. Awesome. So bonus question. We do have a few minutes here, so would love to hear your thoughts on the bonus question here.
Well, the bonus question emerges from someone saying, well, I've told you a little bit about my business. What's it worth? And it's like the classic answer that most people hear in response is, well, it depends. And they'll say, well, what does it depend on? And so we developed a scorecard. We called our professional services valuation scorecard, for lack of the more creative name. And it goes through all the KPIs a professional services company should know about that impact valuation. And so that's something we give away for free, and we walk people through it. We are hyper transparent, and we tell them what that basically implies with a reasonable range. But I will tell you, the first things that we look at, let's assume they've achieved sufficient scale for us, and that would be north of 20 million in revenue. We look very quickly to the organic growth the company is producing. Have they again achieved 15 or 20% plus organic growth? And what are the margins that they're generating with that growth? Which implies how high quality is that revenue. And without fail, every professional services company exists within a very predictable band of gross margins and EBITDA margins, and you look at that. Beyond that, we look at how much revenue are they generating with each of their clients. Have they proven the ability to generate $500,000 or even $1 million or more of revenue with those clients? And is that revenue increasing year over year? That's also critical. And then there's an array of additional KPIs beyond that, which are in the scorecard. And if any of the listeners are interested, I'd be happy to walk them through it. But those are some of the things that we look at right out of the gate.
I just love that. So yeah, just seeing that organic growth, 15 to 20% plus growth rate year over year, having strong margins, and then really seeing, revenue, per client growing over time. Like those are the key factors that you're seeing. So like that retention of clients, that growth of clients, and healthy margins. It sounds yeah.
Yeah, and achieving critical mass of revenue with those clients as well. Have you been able to demonstrate value such that someone's willing to part ways with, $500,000, $1 million, of value to continue working?
I love that. That's super helpful to see, and I love just the simplicity of just saying margins. Everyone talks about EBITDA, SDE, all these different ways to calculate it, but at the end of the day, are you profitable on your revenue? And I think that's what you're talking about there, just the way you look at it. So yeah. Awesome. Well, Mark, thank you again for taking the time on here. If someone wants to go find out more about RLH, if they want to see your scorecard, your approach, anything there, what's the best place to find you online?
Well, they can email me anytime. It's mark@rlhequity.com. We've got a tremendous amount of information on our website. Beyond just our bios, the deals that we've done, we actually have a page called The Journey that tells business owners what they can expect in a transaction with RLH. I think that's proven to be a very useful resource for folks over time. But now people should get in touch anytime they want.
Awesome. Well, sounds good. Well, thank you very much, Mark, for taking the time to come on here.
Well, thank you, Jake. It's been great.